So let's understand the next set of accounting entries for order to cash. The next topic would be entries related to revenue. So let's begin with unbilled revenue. For unbilled revenue, we will debit unbilled revenue and the credit will be to revenue. Once the billing happens, we have to debit accounts receivable and credit to unbilled revenue. Raising of an invoice or in normal scenario, a billed revenue would be accounts receivable debit and credit would be to revenue directly. Deferred revenue or advance invoicing. In this scenario, you will debit accounts receivable and the credit is always to deferred revenue. And once the revenue gets booked from deferred revenue, the entry would be debit deferred revenue and credit to revenue. And it is based on the respective time periods and month on month or quarter on quarter. Yeah. So let's look at the next set of accounting entries for accounts receivable. For goods or services sold on credit, the entry would be to debit accounts receivable and credit to sales. For payment received from customers, the entry is debit bank and credit to accounts receivable. For early payment discount to customers, debit bank, debit early payment discount and credit to accounts receivable. For sales return or cancellation of an invoice, raising of a credit note, the entry would be to debit sales and credit to accounts receivable. So let's move on to the next set of accounting entries related to bad debts in accounts receivable process. For allowance for doubtful debts, we will debit the bad debt expense and the credit is to allowance for doubtful accounts. And whenever there is a AR write-off to allowance, it has to be debit has to be to allowance for doubtful account and the credit would be to accounts receivable. This entry is passed because we have already booked the bad debt expense and we don't want to duplicate it and we have a provision to that effect. So if it is a bad debts write-off from AR directly without the allowance for doubtful account or without provisions, then the debit has to be to bad debts expense and credit has to be to accounts receivable. And any bad debt expense, if it is recovered, the entry would be debit bank and credit to bad debts recovered. The next set of entries is on factoring in accounts receivable, one of the most interesting aspects of accounts receivable. The first entry is on accounts receivable when it is sold to a factoring company without recourse. There is no recourse. So the entry would be to debit bank and debit loss on sale of receivables and debit retention amount due from factor if there's anything which is retained by the factor till the end of contract and credit to accounts receivable. And in the case of accounts receivable sold to the factoring company and we have a recourse available, the entry would be almost similar except for one segment. So it will be debit to bank, debit to loss on sale of receivables, debit retention amount due from factor, credit to recourse liability, and credit to accounts receivable. The only segment which is different from the no recourse is to create a liability, a credit to recourse a liability account. So we have to cover to the extent where the factor has a recourse and we have to pay back to the factor. So the liability has to be created to that extent.